With U.S. markets currently closed, Materials Corp, ticker MP, finished the last trading session on Monday, October 13, 2025, at a price of $15.31, marking a decrease of 2.1% for the day. While a single-day drop of that size is common, what's far more telling is where the stock is trading relative to its all-time highs. And the immediate, unavoidable truth is that the company's stock performance has become almost entirely disconnected from the grand strategic narrative that propelled it into the spotlight. Investors initially saw this as a cornerstone of American industrial independence, a direct play on the electrification of everything. The reality hitting portfolios now is that MP Materials is, for all intents and purposes, a prisoner to the spot price of a single commodity group, neodymium praseodymium, or NdPr. Every bull thesis about electric vehicles and national security is being overridden by the harsh, simple math of commodity pricing. Most people looking at this stock, perhaps on their Robinhood app or through a Fidelity screener, see what appears to be a clear and compelling story. Here we have the only scaled and operational rare earth mining and processing facility in the entire Western Hemisphere. It's supposed to be the answer to China's dominance in a critical supply chain, a necessary component for the high-powered magnets that go into everything from the motors in a Tesla to wind turbines and precision-guided munitions. This is the story of reshoring, of strategic assets, and of securing the future of green technology. It's an easy narrative to believe in, because on a macro level, it is absolutely true. The demand for these materials is set to grow substantially over the next decade. However, that expectation is colliding with a very different operational and financial reality. The stock is not trading on its long-term strategic importance. It's trading tick for tick on the price of the rare earth oxides it sells. The belief in the mission is one thing, but the cash flow statement tells a more immediate and, frankly, a more concerning story. For much of the past year and a half, NdPr prices have fallen dramatically from their peaks, and that has directly compressed MP's revenue, margins, and ultimately its profitability. The company can increase production volume, improve efficiency, and hit all its operational targets, but if the market price for its primary product is down 40 or 50%, the financial results will suffer. This is the core conflict that many investors are now grappling with. They bought a technology-enabling growth stock and found themselves holding a volatile mining operation. Understanding this distinction is critical for anyone managing an individual brokerage account. Looking at the recent stock movement, the trend is unambiguous. The consistent downward pressure reflects this commodity price weakness. Trading volumes on down days have often been elevated, which can suggest that some long-term holders are finally capitulating, selling their positions out of frustration with the lack of a turnaround. We've also seen significant short interest in the name. This isn't necessarily a bet against the company's existence, but rather a bet that the fundamental driver, NdPr pricing, will remain weak in the near term due to sluggish global economic growth and sufficient supply coming out of China and other regions. Anyone using an advanced interactive brokers trading platform can track these short interest metrics, and they paint a picture of deep skepticism among a certain class of traders. They are actively betting against the popular narrative. This contrasts sharply with the performance of a stock like Nvidia stock, which, while volatile, is driven by product cycles and demand for computing power, not the raw price of silicon. MP Materials is in a completely different category, and this is where many retail investors, perhaps using straightforward platforms like SoFi Invest, may have misjudged the risk profile. Institutional activity has been mixed. While some growth-oriented funds have trimmed or exited their positions, filings occasionally show value-focused institutions beginning to build a small position, suggesting they see long-term value at these depressed levels. They are not buying for a quick trade. They are making a calculated bet that the supply-demand balance for rare earths will eventually tighten significantly, This is a long-term perspective that requires a great deal of patience, something that can be difficult in the fast-paced world of online investing. Many are looking for investment help, and the simple answer here is that the timeline for a recovery is highly uncertain. You can find plenty of Fidelity ETFs that hold mining companies, and their performance often tells a similar story of boom and bust tied to the underlying materials. So, for those less familiar with the specifics, what does MP Materials actually do? The company owns and operates the legendary Mountain Pass mine in California, one of an exceptionally rich rare earth deposit. Their current operation involves mining this ore and processing it on-site to create a concentrated rare earth oxide product. This concentrate, which is rich in NdPr, has historically been shipped to China for further separation and refining into the metals and magnets in manufacturing. The company's grand plan, however, has always been to vertically integrate its operations. Stage 2 of their plan, which is now largely complete, involved bringing the separation facilities online at Mountain Pass, allowing them to produce separated rare earth oxides domestically. Stage 3, the most ambitious part, is the construction of a magnet manufacturing facility in Fort Worth, Texas. This would allow them to take their own rare earths and turn them into the final high-value product, capturing the entire value chain within the United States. This is the ultimate goal, the thing that would truly make it a strategic national asset. This brings us to the future outlook, where the tension between expectation and reality becomes even more pronounced. The expectation is that the world's accelerating shift to electric vehicles and renewable energy creates a nearly unstoppable demand tailwind for MP's products. With their Stage 3 magnets facility coming online, they will be perfectly positioned to supply automakers and defense contractors right here in the U.S., insulated from geopolitical turmoil. The U.S. government, through grants and tax credits from legislation like the Inflation Reduction Act, is expected to provide a supportive backdrop for this domestic supply chain. People see this and think it's a straightforward path to success, a great option for self-investing. But the reality is that this path is filled with significant hurdles. First and foremost is the commodity price. A sustained recovery in NdPr prices is essential for the company's core mining business to generate the cash flow needed to fund its ambitious expansion. Second is execution risk. Building and scaling a state-of-the-art magnet manufacturing facility that can compete on quality and cost with decades of Chinese expertise is an immense industrial challenge. There could be delays, cost overruns, or difficulties achieving the required performance specifications. Finally, there's the competitive landscape. While MP is unique in the US, they will still be competing in a global market. If Chinese producers decide to flood the market with low-cost magnets to protect their market share, it could create a very difficult pricing environment for MP's new facility. Investors using tools from Fidelity Wealth Management or even robo-advisors like Schwab Intelligent Portfolios need to factor in this substantial operational and market risk. It is not a guaranteed success. The investment thesis relies heavily on management's ability to execute a very complex, multi-stage industrial project on time and on budget. What are the potential catalysts that could change the story? A sudden, sharp rebound in NdPr prices is the most obvious one. This could be triggered by a stronger-than-expected recovery in global manufacturing, or if China implements stricter export controls on its own rare earth production. Another major positive would be the announcement of a large, long-term offtake agreement for its magnets with a major Western automaker or a defense contractor. This would validate their business model and de-risk a significant portion of its future output. These are the signals that investors across all investing sites, from SoFi to Interactive Brokers, should be watching for. I want to hear your thoughts on this. Comment below with your opinion. Do you believe MP Materials' vertical integration into magnet production will be successful enough to shield it from rare earth price volatility within the next 3 years? In closing, the story of MP Materials is a powerful case study in the difference between a compelling narrative and a challenging financial reality. The expectation is that of a secure, geopolitically vital asset essential for the modern economy, a rival to the dominance of Apple stock in its own sector. The current reality is a mining company whose fortunes are tied to the volatile ebb and flow of a single commodity price, facing the immense challenge of building a new industrial capability from the ground up. The long-term vision is absolutely intact and holds significant promise, but the short to medium term is fraught with uncertainty and risk tied to commodity markets and project execution. The essential question for anyone considering an investment in this company is not just about believing in the end goal, but about having the conviction and risk tolerance to withstand the potentially difficult and volatile path it will take to get there. The strategic importance is clear, but the stock price will ultimately follow the cash flow. Blue sign, disclaimer. This video is for educational and informational purposes only. It is not financial or investment advice.